All right. Welcome everyone. This is going to be a simulation session on gold. Can we raise questions, if any, in between sessions? No. If you do feel the need to ask a question and that feel the need is like really, really strong, just hold that question in for another 5 minutes. And if that question is not answered in the next 5 minutes, when that question comes to your mind, it's going to be answered. Or if it's not answered, then you can just ask it. All right, so let's do this here. So first of all, we're gonna go to we're gonna pick up a random date over here. We're gonna pick up a total of 20 dates. We're gonna start from, let's do December. Okay, let's do December from the 12th, 2021, all the way into, so we have May starting now till April 30th. Yeah, let's do that. Only Sundays. All right. All right, so we got these dates right here. We got January, February, March, April. Let's start off with February, 6th February, 13th February, 20th February. Actually, let's do 13th February because I forgot the 14th. Okay, 13th February over here. Okay, so close this. We're going to start new simulation. We're going to go towards 2022. Oh, what the hell is this? Oh, pound. We're trying to do gold. Okay, let's do gold here. February 13th. We're going to start with, let's start with 7,000. Yeah, we're going to start with 7,000. Time and charts, we're going to choose New York close. Leverage 1 to 100. Spread, we'll do fixed spread of around 1.5 pips. History unit charts, we're going to do 300 at this point. All right, everything looks good, looks good, looks good. All right, let's start this now. So first of all, we're going to load up these charts over here. We're going to go towards the weekly, add the weekly. We're going to start the daily chart. We're going to start the 4-hour, 1 hour, and so on and so forth. 15-minute, not really going to use the 15-minute, but you know, we're just going to consult 15-minute for certain things, and I guess that's about it. Now let's open up these charts here one by one. 15, 30, 1 hour, 4-hour, daily, weekly. There we go. Perfect. So first things first. First, we're going to talk about this gap right here. Why do we have these gaps? Why do gaps happen? What do brokers do when gaps happen? Stuff like that. So basically, what happens is that brokers, they get prices from liquidity feeds, right? Liquidity feeds get prices from the live market. So we get prices that way. During the weekdays, when you're seeing price move, right, that's the time when you're getting live price from the market, right? Whenever the market closes, price is still moving because things are still happening, economic activity is still happening, fundamental activity is still happening over the weekend. So price is still moving over the weekend. We just can't see it because, you know, the broker is closed, so they don't have any price to show you. But in the back end, price is still moving. Can I see the price moving? No, I still can't see the price moving because, you know, the liquidity hasn't opened those, I would say, like price windows for us to see. So whenever the new day starts, so let's say, let's go towards the so let's say the price closed at 1857.60 on Friday, and when Monday starts, on Monday the gold price is at, let's say, 1859. So whenever the Monday is going to open and we get the first price, it's going to be at 1859. So that's why you see a gap. That over the weekend, price moved up, down, up, down, up, down. But when the market did open, it opened at 1859. We're like, oh, okay, we have a gap over here. Sometimes the gaps are huge, depending on what happened over the weekend. Like, when there was Brexit, stuff like that. When there were trade wars on China trade wars, there were gaps at that time. COVID gaps. There was I remember when Russia was attacking Ukraine, there were massive gaps in gold. So that's how gaps do happen. Okay, so let's move on towards pre-NY. That's what we're going to be focusing on. So we're going to move on towards pre-NY. You can see the time right here, and we're going to move up. 2, 3, 4. When the time comes towards 1000 hours, this is London Open. We want to go to pre-New York, so 3 a.m., 4, 5, 6. 6 a.m. Eastern. This is when we're coming up to the charts in the morning, pre-New York session, then we start to do our top-down analysis. Doing top-down analysis is very, very important because you get to see where the higher time frames are, and based on the high time frames, where you think the small time frames can go. So, oh shit, okay. I'll be right back. 2 minutes. All right. Sorry about that. So, let's take a look at the daily. Daily is moving bullish. First thing you want to see is how the previous candle is. This recording? Man, are you kidding me, Alex? You've been here for so long and you're asking me, is this being recorded? Come on, man. Yeah, trust me, it's being recorded. I'm just making sure. Yeah, it's being recorded. So first thing you want to see is that the previous candle was bullish, right? And you got to take a look to the left-hand side to see what was really the market structure to the left-hand side. And the first thing we can see on the left-hand side is, let me just bring up the charts, bring up line studies. Yeah, there we go. We had a resistance right here, and now we're approaching a very strong resistance up over here as well. So we don't know whether this daily candle is going to push bullish or will the daily candle continue moving bearish. We don't know that yet. So we're going to move on towards the 4-hour time frame. Looking at the 4-hour time frame, we have a support formed because we had a bearish candle followed by a bullish candle, and then we have this high creator right here, right? So just by looking at this chart, it's very easy to see that, okay, you know what? We have a bullish trend. Price moved up, made a high, came down, creating support. And now this 4-hour candle is possibly making a lower wick to continue pushing up. Now we have a bias right here, right? A bias is, we have a bullish bias. 4-hour candle looks like it can go up as well, but we need confirmations on the smaller time frames. So let's move on to the 1-hour time frame. Let's zoom in. Now in the 1-hour time frame, we have a support down here, and we're creating a resistance right over here. Now, if we break above this area, 1857, there is a lot of consolidation here to the left hand side, right? But then we have almost like a wick fill at around 1865. Now the thing about volume and consolidation is that price will always move through consolidation when there's a lot of volume in the market, right? Like normally when there's market opens, pre-market, when there's news events, that's the only reason or way how price is going to move through consolidation areas. Now, obviously, if we break below 1851, we got a very clean range for price to move down, right? We got almost like a 97 pip range. But if we move above, we would need price to break and close above this resistance during high volume, right? Pre-New York, New York Open, so on and so forth. So I think at this point, we're just going to clone this over to the 30-minute time frame, and I guess it's going to be better to just wait to see how we either close above or we close below. But if we measure this range where price is in right now, this is a 66 pip range, right? It's a 66 pip range, but it's not a tradable range because candles have just been moving up, down, haphazardly. So I think it's going to be very important to just wait to see how price develops above that zone or below that zone. So we're just going to wait and see here, and then we will execute. Probably above, or probably we're going to execute below. So yeah, right now there's basically nothing happening at this point. So we're just going to sit tight and we're going to wait. If we do break above, I think that's going to be a very, very good opportunity for price to move up. But if we break below, then, it's going to be an amazing, amazing move over here. Don't shake your head. And yeah, it happened in the past. Yeah. I think that's when I was using OBS, like new, new user of OBS, I guess. Yeah. So as you can see, the time now when you're doing a simulation, it's very important to keep track of time, right? Look, 30 minutes is almost up right over here. 30 minutes is up. Candle, does it seem like it's gonna go bullish? Don't really think so. We're still in this range, so it's a non-tradable range. The plan is simple. All we gotta do is wait for price to either break above this area or close below this area or break below this area. That's it. That's all what we want. That's it. And I know someone may say, "Oh, but aren't you afraid of consolidation here to the left hand side?" Um, no, because if this break does happen during NY Open or whatever, then we can say that, okay, you know what, this is NY Open. We have a lot of volume, so price has a higher probability to move through consolidation during high volume. But if we break below, it's going to be pretty easy for price to move down. But also keep in mind that our 4 hour, once we break above this area here, this is also the 4 hour candle trying to move bullish, right? So we're just visualizing how a 4 hour candle can move bullish or print bullish. That's all what we're trying to visualize over here. Oh, yeah. So far, there's basically nothing happening right now. As you can see, this is pre-New York at this point, and we're trying to move into slowly we're coming up to NY Open. Candle's going to close in 3, 2, 1. There we go. So candle has closed bullish. We're making higher highs and higher lows. We'll just roast people at YouTube, go like with this range. Yeah, exactly. So I mean, right now we're making higher highs and higher lows, but we're not moving up. For us to move up, we need to break above this area. See this area right here, 30-minute to the left hand side. We got to break above there. So let's scale fix this. See that? Almost came up, but then we rejected that area. And also, look, this is not even, we're coming closer to NY Open. So if you notice how we haven't had a break and we're coming closer to NY Open, maybe we're gonna get a break at NY Open. And also remember, NY Open volume does not always come at 8 a.m. We're gonna get closer to 8 a.m. now. It's between 8 and 9 because that whole hour is the NY Open hour. So let's take a look at news over here. We have no news, nothing. So yeah, I mean, we're still in this range over here now. So we're just waiting, basically. The plan is to wait. Let's speed it up here a little bit. Let's wait for this candle to close. Actually, let's move forward by 1 30-minute candle and we can see how this candle closes. Oh, wow, look at that. So this candle went all the way down over here and it rejected it. So what's happening right now? Nothing. Absolutely nothing. So this is NY Open, and yeah, this is NY Open. We're just waiting for candles to print in a way that we recognize, and then we can possibly execute something. But right now, candles are not, our market structure is not printing in a way that we think that, okay, this makes sense to continue or whatever. Oh, look at that. We are moving up over here now, slowly. Slowly but surely, we're trying to move. Oh, the candle's about to close. 3, 2, and 1. There we go. Candle has closed. Now, if this candle breaks above this area, I think we can continue pushing up, or if we do break down, so we'll see. But we need this candle to make a lower wick first before we can confidently say, oh, we're breaking above that area. Speed it. Let's bring it down a bit. Slow it down a little bit. So this is going to be if it does break above, I think it's going to be a form of an impulse entry. But I don't think that's going to be happening in this session here. Oh, you see that? We're breaking above right over here. We are breaking above. I think we're a little bit late, but so in this case, what we're going to do is I'm going to go with the lower risk, like around 0.5. Right? I'm going to go with 0.5. So since I missed it, I'm going to add a position right here. And the stop is going to be kept not below this wick, right? Because if the stop is kept below this wick, this is a 43 pip stop, right? The stop is going to be within this range right here. Because if we're consolidating from, your Asian session coming in towards London and pre-New York, and we're leaving this range, there's a high probability for price to continue pushing up. If we consolidated for this long, and now that we're breaking with volume and we have consolidation to the left hand side and there's a lot of volume at this point, so there's a high probability for price to continue pushing up. So if we do keep stop within this range, that means that price has no business coming back in the range. If it comes back in the range and the candle retraces in the range, then it's probably not a great break up. But okay, so let me enter right over here first anyway. So if I take a buy right here and put my stops down within this range, and price, let's say like retraces, then we can add another position. So we're using dynamic risk at this point. If it retraces, then we can add another position, and if it just goes up, then let it go up. So that's why I've used a lower risk, because I've missed it. But the whole idea, if you look on the 4-hour right here as well, 4-hour has pushed bullish here as well, so I think it's going to be a very, very good idea for price to move up. Yeah, there's a retracement right there, right? So this is where, do you think you would have put, yeah, I would have put a buy stop, but basically it didn't really cross my mind, so that's why I didn't really put a buy stop. But I actually would have put a buy stop. All right. Since there was no volume during London session pre-New York, so New York Open has to bring volume, and that volume should continue driving price up. Let's take a look at these trades over here. Pretty nice. One's running at 2019 pips at this point. The candle's about to close. Let's take a look on the 4-hour, the 1-hour. See, the 1-hour is coming up to a possible rejection area. So as it continues within that area, we're going to be securing positions, putting some at break even and letting the rest run. Okay, so right now we're coming to these wicks here to the left hand side. So we're going to secure, let's say, this one, put stops at break even and remove, take profit, and that's it. Let it run. Right? And if you look on the 4-hour now, the whole visualization of the 4-hour to continue pushing up, it came to fruition, right? All we had to do was to look for confirmations on the lower time frames, right? And the whole idea about, we have consolidation to the left hand side, and the only way we're going to break that consolidation is going to be if if there's a lot of volume in the market. So I guess we can let this run till London close because normally trends do last till London close. So I'm going to forward one candle and then the next one. Oh, damn, 30-minute candle really pushed up over here. Yeah, this is where your trades really continue to run. When there's so much volume, price just continues pushing up and up. So, now this is going to be London close right here. This is London close right here. So I guess we're going to take profits on this one and move on to the next day. So this one move, we risked about 1.5% total because I had three 0.5% positions. And total gain is 3.5%. So now we're going to move on towards the next day here. But I'm sure there's going to be no questions with this because we answered everything. Biggest question could have been, oh, aren't you afraid of consolidation? So we answered that as well. All right. Let's move on to the next one right here. So whatever happens after you take the trade, whatever happens to the price, that's none of our business because, wow, man, this thing just continued running. Never really even came towards the entry price. Nice move over here. Oh, wow, what's happening? 12, 10, 11, 12, 13. All right. This is pre-New York at this time right here. So taking a look on the daily time frame, daily has rejected this resistance right over here to the left-hand side. Now, looking at the 4 hour, 4 hour is also rejected and coming straight down. Now, we don't know whether price is going to continue pushing down or whether price is going to, start to retrace and go up, create support and go up. We don't know that. Looking on the 1 hour time frame, we are coming down towards a possible support right here. And we don't know whether price will continue pushing down into the support, which is what, 35 pips away, or will we create support to continue moving up? There's a lot of volume here. I think, yeah, this was a Russia-Ukraine thing. So I guess we can create some market structure and work with volume here. So at the same time, we're creating a resistance on the 30-minute time frame. Notice how on the 1 hour, we don't see any market structure. But on the 30-minute, we do see a resistance being formed right at this point, and we have a support all the way down over here at 1851. So basically, we need to see whether, okay, let's take a look at the 15-minute time frame. So 15-minute is also consolidating at this point. I guess we're gonna have to see whether the next 30-minute candle can wick up, break this low to continue down, or if we do break above 1857, is there enough volume in price to possibly continue pushing up? That's something we have to take a look at. So I guess we have to wait to see what happens now at this point. Let's zoom in on the 15-minute here as well, and let's target this as well. So we got 15-minute, we got a 15-minute support that we're looking at right here. I'm only going to do this on the 15-minute because if the 30-minute starts breaking below or it starts breaking the high, then we would know how to react to that. All right. Let's speed it up here a little bit. Once this candle, the 30-minute candle, breaks the previous 30-minute candle's low, that's going to be the opportunity for price to continue pushing down in this 27 pip range. I think that's going to be an awesome trade. Really small trade, small move. Oh, almost broke that low over there. But we haven't broken that low. Let's slow it down here a little bit. This thing is moving super fast. Slow it down even more, because we don't want to miss it. All right, there we go. The 30-minute candle closed like a small body candle. Now, Here's the thing about a small body candle. Whenever a candle closes with a small body means that the volume in that direction is dying, right? So look, we had a big bearish body candle, we had a bullish candle doing a little, making some sort of a resistance. We had another big body candle. Now we have a small body candle. Now, two things can happen. If this new candle respects this low right here, then it means price will continue pushing up and we can break above 1857 and continue to move up, right? And then we can say that, oh, maybe Russia is attacking Ukraine again, so technically makes sense for gold to go up and fundamentally makes sense for gold to go up again. But if this candle breaks the previous candle's low after making a top wick, then there's a very high probability that we will continue pushing down. Make sense? So for price to move down, we need to do. So let me just bring this right over. So for price to move down, we need price to make a lower low, a lower high, break the previous low, make a lower low, and a lower high, and a lower low. But if price makes a lower low and it makes a lower high, but respects the previous low, right? If it respects the previous low, then there's a high probability it's going to continue pushing up without continuing this bearish trend. So that's something very important to be aware of at this point specifically when we have candles in such a way. So see now, as much as price moves up, it's making a top wick. So we really want to see if it's going to break that low or not, because if it breaks that low, then there's a very high, yeah, see, like right there. Now this is a very high probability for price to continue pushing down, because we went up, made a wick which is lower than the previous high, and now we're breaking this low. So I guess we can possibly execute a sell. Stops are going to be above this current candle, and we're looking at price to possibly continue pushing down over here. I mean, this is a picture perfect example of an impulse entry, I would say. There's just going to be super easy move down at this point. Yeah. Should continue pushing till like at least to fill this wick here as the candle comes to a close. Oh, there we go. Candle's pushing. Oh, it pushed down further than I thought it would. So we're going to close partials right here. Close about, 90% and leave the rest running. Put stops at break even. That's it. Yeah, I think this was super simple. There was no technicality in that. We just had to wait for price to do something that we had seen before or something that we wanted price to do. And yeah, basically we broke that low and continued down. Looking at the 4 hour, 4 hour is also very, very bearish. Looking at the 1 hour time frame, new 1 hour candle has formed. You can see where the 1 hour candle has closed, it closed above this area, right? So if we form a support at this point, there's a very good possibility we can continue pushing up, because look at the ease how price moved down. Look at the body of the 1 hour candles, how there was big body and then bodies start to get smaller and smaller, and then we have a rejection right here. So if we close bullish on the 1 hour, I think we can take a buy for price to move up. So, but we still have this position running, so we're going to wait and see. Oh, okay, well, this is, I guess, continued to push lower here, I guess. Oh, wow. Damn, didn't really expect that at all, but I guess we're just going to close this right here. Didn't really expect that at all. So, awesome. This trade example is really solid because, we waited for price to break below the low, stops were above this candle, there's a clean range to the left hand side, secured positions, leave the rest running. Position ran an extra, like 50 pips at this point, thanks to a lot of volume here in the market. So, yeah, securing positions when there's a lot of volume is very, very important as well. Can we take impulse entry after break support again? No, because price has already moved. This is something you guys have to really understand. Whenever price has already made big moves, don't chase that price. If you're coming to charts when price has already made this big move, that means you're late. That's it. That means you're late. Remember, whenever lions hunt, the lion eats the best parts of the of the kill, and then the hyenas and the vultures come to eat the shit. So once the move is done, that's it. Then you got to come back the next day. So that's something I really had to overcome in the start when I start trading, because I would see big moves happen. And I'm like, oh, okay, these moves are going to continue, and I will get really burnt at that time. But then I soon realized that, okay, if I'm seeing big moves happening, someone already took those moves. That means they already made the majority of the money. So do I want to make or try to make scraps, or do I want to come back tomorrow and make majority of the money? And I decided to make the majority of the money. So that's why I start to do this. So just wait till market forms support, candle close with this high volume bearish candle on the left hand side. Yeah, that could happen, but we can see how this candle moved down and then it rejected this area. So we don't know whether it's going to be a rejection or like what's it going to be. I mean, if this is even going to continue down to fill this wick or not, because this is basically a rejection to the left hand side. So let's see how this 30-minute candle closes. Oh, we did fill that here a little bit, and then okay. All right, let's move on to the next one. Move on to the next day over here. Oh wow, see, look at that consolidation. After this big move, we have just consolidation right here. Okay, so London Open, 3, 4, 5, 6 a.m. Eastern. All right, let's remove all analysis here and let's do some fresh analysis. So remove on the 4-hour, remove on the 15-minute, remove on the daily. So just by looking at the daily, you can see there was a resistance to the left hand side. This daily candle came down, rejected that area, and the new daily candle is forming bullish right here. But we don't know whether it's going to continue moving up or it's going to move down. We just don't know that. But we do know that there was a resistance. Price moved up, came down, doing a little bit of a retest. So technically, should move up. Will it move up? We don't know. So we got to basically figure that out right now. So now looking on the 4-hour, first things first, we need to identify a support zone, which is probably right over here. Second thing, we need to identify resistance, which is right over here. Now, the third thing we need to identify is where will price go if we break above resistance. And we can take a look to the left hand side. We see there's a clean range moving all the way up towards 18,884 pips, right? What's going to happen if price breaks support on the 4-hour? First, we have these wick fills to the left hand side, 55 pips, and then we got like 97 pips down over there. Perfect. 4-hour, we looked at most recent support resistances, and then we identified where can price go if we break down or if we break up. Now we got to take a look on the 1-hour time frame. Looking at the 1-hour time frame, what we can easily identify is that we have a resistance on the 1-hour time frame, and looks like now we need to identify support. There's one support down over here, but then there's also another one right over here. We have this support right here on the 1-hour time frame. So this right here, we have a support. If we break below the support, there's a 40 pip range to go down. If we break above this resistance, then there's a pretty good range to go up. Let's take a look at the news over here. We have, retail sales data. Okay. Now let's take a look on the 30-minute time frame. Looking at the 30-minute time frame, again, same thing. We have a resistance right up over here, and we have maybe a support right here. So I guess we gotta wait to see how the next candles close. 30-minute time frame is just a bunch of candles, just so tough, because look, price consolidated its way up. So we don't know if it's going to go up or down the next one, because this candle closed like a doji candle. So if it closed like a doji candle, we don't know how the next candle is going to close, so we got to wait for that next candle to close, basically. I mean, what else can you do? So we're going to wait to see how that next candle closes. I mean, if this candle makes a top wick and breaks the previous low, I guess we can move down, but there's a consolidation moving up, so we don't know what's going to happen. Why are you not considered support on the left-hand side? Which left-hand side? I don't see anything. On the 30-minute? Where is it? This one? This one? Chandru, come on, hurry up. This one? This one? You're saying now? Maybe right here? No, because we're waiting for this candle to close. We're waiting for this candle to close to see what's gonna happen. Left where, man? Chandru, there are a lot of lefts here, man. Just draw an arrow or something. Do something. Do something. Say a price. Say or do or write something. I hate taking breaks. I hate it. Come on, tell me. Where? 1855. Oh, this one right here? This is a resistance. This happened in the past. This happened in the past. We're not considering this. Oh, this one right here. Okay. Yeah, no, because, I mean, price closed below this area, so we're waiting for this candle to close to see how it's going to close. See, it closed bullish. So now we have this support form right here. That's it. Whenever you're confused that, oh, should I look left? Should I look right? Should I look at this area here or this area here? Just wait for the current price to form. And this price formed like this, it formed bullish. That means we've created a support. And if we break below this area, this is like a 30 pip range right over here. So we formed a support. We can't take a buy over here because if we do take a buy, there's a rejection 8, 9, almost 10 pips away. So we don't know whether price will break above this wick to go up or not. So that's why taking that buy is also going to be very, very tough. But we formed a support. So if we break support, we have a 30 pip range to go down. So sells look way better than buys. Buys because we have this rejection to the left. It can go up, but there's this rejection here, which is very, very scary. Scary because we don't want to take a loss. Oh, see that candle? It closed bullish with a small wick on the top, and we know whenever candles close with a small wick on the top, it basically means we need to wait for the next candle to close. So we shall wait over here. Ideally, if we do break below the support, it's going to be an awesome move down. Ideally. Oh, look at that. Look at that guy go. That guy is going very nicely. We got 5 minutes left for the candles to close. And boom. 30-minute candle closed bearish, respecting that support. Let's take a look on the 15-minute time frame. 15-minute candle is closing bullish with a rejection. 1 hour candle has broken the previous low, and it hasn't made a top wick yet. The 30-minute candle hasn't made a top wick over here, which means there's a lot of bearish volume just by looking at the candles. So I guess if the next candle can break below this low, we have like a 27, almost like a 28 pip range for price to move down. Can we all agree with that? That if this candle makes a top wick and then breaks this low, there's an impulse entry for price to move down. There's obviously a consolidation to the left-hand side, but remember what we talked about when we took the Monday trade, that whenever there's consolidation to the left-hand side, it's only going to be broken if there's a lot of volume in the market. So this is pre-New York, a lot of volume here. Do you think break the high is good to buy too? If we break the high, this is like a 20 pip range. 20 pip range minus 1.5 pip spread, it's like 18.5 pips. It's tough. It's tough. So we're going to see whether we break the high or we break the low. So a range to go down is bigger than the range to go up, right? So that means the sells are big. It broke the low, right? On what basis you did not consider it a trade? That hasn't happened yet. That hasn't happened yet. So if that happens, then we're going to talk about that. We can only talk about the things that are happening. Oh, we are. Oh, yeah, I know. So if it breaks the low without making a top wick, then I'm not going to execute that trade. Because if it broke the low without making a top wick, that means it can retrace to make a top wick. And if now this candle, if it's respecting the low, so if it makes a top wick and then it breaks the low, then that means we have our stop out level, and the stop out level is going to be above that wick. But if it broke the low without making a top wick, then it just becomes very difficult to know whether it's going to make a top wick or not. So see that right there? It's making a top wick over here. So from here, if it breaks the high, it's going to go up. If it breaks the low, it's going to go down. That would be an impulse entry. Yep. Why didn't we execute the trade when it broke the first time? Because this was support. We needed this candle to close bearish. That's why. So here we go. Slowly, probably we will break this low and maybe. Oh, there we go. See that? We're breaking this low right over here. So we take a sell right here. Stop is going to be above this candle. You can see it's about 19 pips, and we're looking at price to continue pushing down towards that support at this time right here. So yeah, what makes you decide when to wait for a top wick? What do you mean? I mean it. I just explained it. If price broke the low without making a top wick, then I've decided that it needs to make a top wick first before I'm going to take the trade. Like a top wick is how candles are formed, just like how normal humans are formed, right? You have a normal human being, he has two arms and two legs. If so, a candle is like that. If a candle has no top wick and you're about to take a trade for an impulse entry to go down, you're just like, okay, there's a probability it can make a top wick. How will you manage risk if it goes against you? If it goes against me, then we're going to manage the trade. Um, why didn't we use a sell stop? Well, you can use a sell stop. I just didn't use a sell stop. So we are going towards impulse entries here with this trade because there's a high volume pre-New York. New York Open is going to be here in about, some time over here. Oh, very nice. Very nice move. Didn't really get to close positions. This is the same thing that happened to me on NFP. Price moved down and didn't really get to close positions in profits. So I guess since we got late to close positions right here around 10 pips, I'm going to secure, and oh yeah, that's it right there. I'm just going to secure the secure 90% and leave the rest running. Should have secured right over here, because even if we have a take profit, it doesn't necessarily mean that price will continue pushing down to that support. It just means that there's a support area, so price can reject anywhere within this vicinity. So that's why it's very important to secure as price comes towards, certain rejection areas. Hasn't really moved down to that area here at all. So did you hold the spike on NFP or did you open after the spike? I took two trades. I took one trade, lost that trade, and then took another trade and won that trade. Like I gave my trade a second chance. I think we recorded that on Zoom. So probably by tomorrow or sometime I'm going to upload that as well. Awesome. Let's move on towards the next day. Oh wow. Oh damn. Just moved up over here. Reversed. Okay. That's fine. So this is London Open. Oh damn. London Open always had moves with Russia and Ukraine, I remember that now. Okay, this is Thursday right here. Let's take a look at some news. We have no news coming up at all. So let's take a look on the daily here. Daily is obviously bullish. There's nothing towards the left hand side. Looking on the 4 hour time frame, 4 hours also bullish. We broke above a resistance on the 4 hour. There's maybe the 4 hour candle can continue pushing up, or the 4 hour candle can retrace down to make a support. We don't know. Let's take a look on the 1 hour time frame. 1 hour has clearly made a high, and after price makes a high, there's a opportunity for it to maybe retrace, create support, and move back up. Let's take a look on the 30-minute time frame. 30-minute candles are also coming down over here, which is awesome. So we've made a high right here. So all we got to do is wait for price to create support and then retest this high. That's it. Or if we do create support and if we break that support, then we can continue pushing down. But right now, we have to wait for price to create some sort of a market structure, right? Because we made a high, we're in the middle of, price deciding what it wants to do at this point. So I think it's going to be very important to wait for price to create some sort of a market structure. Right now, there's no market structure. Right now, price is just bullish. So we got to wait. This 30-minute candle is about to close over here. In 5 simulation minutes, you can see how it's sort of like rejecting that area. Oh wow, we did close right over here. So the support has not formed yet. Support has to form first for us to say that we can take a sell or not. Even if this candle breaks this low and moves down, that's totally fine. I'm okay with missing that trade because I want to see a support formed. Because if a support forms and price breaks support, then we can take a confident sell. But right now, there's nothing happening at this point. A doji candle wouldn't count as well support resistance. No, a doji candle wouldn't count as that. We need a solid candle forming. See now a new hour is about to start. This candle is about to close, and there we go. Candle has closed bearish. 1 hour candle is still bearish. 4 hour candle is bearish. So yeah, so we just gotta wait. Just gotta wait for a sign. If we get a sign, we will win a trade. If we don't wait for a sign, we will lose anyway. All right, so see that 30-minute candle, we're pushing up over here, so which is pretty awesome. If we create a support, I think we can move up. But if we don't create support, then I don't know. Would you consider selling on first bearish candle on 30-minute? This one? No. Because price makes a high, man. Whenever price makes a high, it's going to retest that high. That's going to be the easiest trade you will ever take. You just got to wait. How big is this candle on? Oh wow, this is a 36 pip candle over here. But it's good because the candle is about to close and it's coming to a close right here. We have successfully created a support right here, right? So now there's a very, very, very high probability that the next 30-minute candle will close bullish and we will continue pushing up to fill this range. Looking at the 1 hour time frame, 1 hour candle is also closing bullish. Well, it's still got one 30-minute candle left, so I guess it's going to close bullish. So what we're going to do over here is probably use maybe actually, yeah, we'll just go with this over here. So stop is going to be, I don't want to put it below this candle. I kind of want to put it in the middle because, if we take an entry right here, below this candle, stop is going to be around 30 pips. But if we have it somewhere over here, trusting the fact that this candle would not retrace all the way down and then probably give us opportunities to add a position, I think that's going to be good because we're looking to add another position because we're already up around 6% for the week. So we're looking to leverage these profits to probably add a position if we do get that opportunity. But we really don't want any bearish movements over here because price made a high, and if we're creating support, there's a very high probability price should continue pushing up. So the first 15-minute candle is about to close on this 30-minute. Let's take a look at that 15-minute. 15-minute candle is closing bullish, which is beautiful. This is awesome. This means we can probably bring the stop below the 15-minute candle, right? So I guess we can do that if this new 15-minute candle does not break the 15-minute candle low. Because if this 15-minute candle breaks the low right here, then we have to close 50%. So look, right now, our risk reward on this trade is what? Like around, I'd say like, the stop is right here. So now if we move the stop loss, let's modify the stop below the 15-minute candle. And we're modifying the stop right over here. If wick is too long like that, next candle, what should we do if we still not profit? Wait for break that long wick. Which long wick? 30-minute, 15-minute, 1 hour. You guys have to be extremely specific. This one, break this long wick. Oh, but I didn't wait for that wick to break. You can do that too, but then your stop is going to be below the current candle that's breaking the wick. So yeah, that would make sense. All right. This candle is about to close over here. Looks like we should be closing bullish. Yeah, see right there. Candle has closed bullish. Let's take a look on the 1 hour time frame. A 1 hour candle has also closed bullish. So just by looking at the 1 hour candle, does it make sense for this candle to wick down and move up? Right? Or does this mean we're just gonna come crashing down? If you look on the 30-minute time frame, this is perfect. Now, even if we add a position right here, the stop is going to be below the previous candle, which is like 20 pips, and you're looking at price to continue up to fill this range here to the left-hand side, basically. And would you add another position? I just already did. So, oh wow, look at that. Yeah, right here you could add, but yeah, we're already deep in 2 positions right here. So this is NY open here as well. Once we start breaking the high of the previous 30-minute candle, I think we're going to be out of, oh yeah, there we go. We're out of the waters here now. This is what we expected, and this is what we're getting. Oh, damn, there's a lot of volatility over here. Time to secure. Wow, I don't like this at all. Probably just gonna secure once it comes up towards 1888 up again, and that's about it. Yeah, just gonna secure this one right here, 27 pips. It's probably gonna move stops to break even on this one. Yeah, that's it. It's got pretty tricky over there. When market is trending and identifying zones, I think we can add another position. Yes, that's correct. So I guess this played out just as we expected. All we got to do is now this candle to close bullish and the next candle to continue pushing up to our filling this range over here. But look at the 1 hour over here, man. This is the best setup. Does it matter when we enter 15-minute have a rejection? No, because overall you're looking at the higher time frame. So yeah, overall you're looking at the higher time frames to continue pushing. That's what you're doing. So I guess we're gonna hit TP right here. There we go, beautiful. What if the first 30-minute candle bullish with no wick? Did you wait for the next candle to close? Yes. Awesome. We have any news? We have no news. Do you have any news for Friday? We have, let's see here. No news. Awesome. Let's move on towards the Friday over here now. So see, like after this big move, we just came down and start consolidating and just price just start to end. This is why whenever I take trades coming in from pre-London or London Open, I always want to, like I always want to secure positions before pre-New York and NY Open because that's where you get retracements. Look at this. This move started from London Open, went all the way up towards pre-New York, and then pre-New York had retracement. So whenever I have swings running from, let's say, Asian Open or pre-London or London Open, I'm always securing them before pre-NY because we could get retracements and then maybe continuations. But in this case, we got a continuation, and then we just got haphazardness right here. So let's move on to the next one right here. So this is when you don't need to wait for a wick candle at the trade, you don't wait at that trade, you don't wait for wick. It depends. There's a lot of different scenarios. I can't answer that. There's millions of scenarios like that. You have to be very specific with the chart. 15-minute confirmation in this is good. We didn't look at the 15-minute confirmation at all. It took a setup on gold by 15-minute, but used half risk because, oh yeah, that's good. 15-minute, good. You're looking at you used half risk. So that's good in that way. Okay, let's take a look at this Friday here now. Daily is very, very, very bullish. This daily candle is coming down. We don't know whether it's going to move up or not. We just don't know that. Looking on the 4-hour, 4-hour is creating some structure. And the structure we see is, first of all, we need to identify a support. This is support right here. This 4-hour candle is breaking below this area, probably to retrace a little bit. It has also created a resistance right up over here. And we need to investigate this market structure on smaller time frames now. Looking at the 1-hour, we have a resistance forming. We had a support on the 1-hour to the left-hand side. Let's draw this right here on the left hand side, and we don't know whether the next 1-hour candle will continue pushing down or will it continue to push up back in this 54 pip range, because this is a clean candle now. So let's take a look on the 30-minute. Looking at the 30-minute, we have a resistance forming right here, and I mean, that's about it. And we have a rejection down over here. So it's very tough to say where's this support on the 30-minute because we have this rejection here. So I guess we're just going to wait. I mean, one possibility could be if we do form a strong bearish candle below this area, then possibly we can say that, okay, we can now continue pushing down to possibly, this support to the left hand side. Or if we can break above this previous wick, then maybe this move down could be a fake out for price to continue pushing up. Those are the two possibilities that can happen. And whenever you're looking at the charts, you always got to identify what can make price go up and what can make price go down. So that's what I'm basically, oh wow, see that? So in this case, in the first minute, we broke the high without making it a lower wick. So if we break the high without making a lower wick, that's not a sign for you to take an impulse entry. So let's see that here again, right? Let's slow it down here a little bit. See, candle is starting right here, and we're breaking the high right here in the first 30 seconds, 1 minute. This is not your indication to take an impulse entry for a buy, because if you look at the previous candles have top wicks and bottom wicks. So if you take a buy right here, there's a very good probability the candle can retrace to make a lower wick. See, now it's making a lower wick. If it breaks its own high after making a lower wick, then there's an impulse entry validation for price to move up, but we have to wait for that now. It looks like it's not going to break its own high. It's probably going to see if it closes bearish. We can take a sell for price to continue pushing down. But we need it to close bearish first. So trading is mostly about just waiting and waiting. So see now, we're breaking below this area. If we do close bearish with a decent sized candle, then we can take a sell for price to continue pushing down. But if we break above, back in this range, then there's a very good possibility we can continue pushing up. Why don't we take an impulse entry sell? Where do you want to take an impulse entry sell, Eric? Below this wick right here? And have a 40 pip stop? No, man. Look, there was a rejection right here as well. You guys need to take notes. I said wait for the candle to close a half decent candle. Just look at how this candle rejected right here. Right? Look at how this candle rejected right here. Because at one point, this candle was just like this candle, a heavy bearish candle, but it rejected and moved up. So what sign are you getting from which heaven telling you that this candle is going to continue pushing down and we should take an impulse entry sell? We're not getting any of those signs. All the signs we're getting is that we're in a rejection area where this candle rejected, which means this new candle can also possibly reject. This is why you guys lose, man. You guys don't fucking wait. You have to wait for things to happen, right? So just waiting for this candle to close. We don't know how this candle is going to close until it closes. See that? Same exact rejection, right? Same rejection. Can we take a sell at this point? Hell no, because this is rejection. This whole area is rejection now. Look, we rejected here before, we rejected here again, and we rejected here again. We need a solid bearish candle forming to give us some sort of a confirmation that, okay, now we can continue pushing down. That's what we need. But we're not getting that. But if we break above this high, then there's a higher possibility for price to continue pushing up. Back in that range. Right? Makes sense? Perfect. This candle tried to go down. It's possibly, looks like we're breaking this. See now, right here, we're breaking this high right here, right? One rejection, two rejection. Actually, no. One rejection, 2, 3, 4, 5. Two rejections. We're breaking above this high. Just by looking at this, ask yourself, what's the probability it's going to continue pushing down after this rejection? Or what's the probability it's going to continue pushing up after this rejection? There's a higher probability for price to go where? Buy. There's a higher probability because we have these rejections here. If, for example, these candles were, let's say this candle was like this, then you wouldn't say, okay, there's a lower probability for price to go up because we have a half decent sized big candle right here. But since this is a rejection candle, which means price is rejecting this area, and whenever price rejects an area, this just means that price tried to go down, it tried to stay bearish, but it couldn't stay bearish at all. And it just, so I guess right here we can use a 0.5% risk, like a lower percent risk stops below the current candle and possibly anticipated to continue pushing up, like an impulse entry. So it's a tricky impulse entry. That's why we're using a lower risk. I think in this case, you can buy without waiting for a bottom wick. Yes, exactly. So this is the case where you can buy without waiting for price to make a lower wick, because a lower wick just basically means a rejection. We want price to move down, make a lower wick to reject, to move up. But we already have these rejections right here. So this is a special scenario, so that's why I say there are like multiple scenarios for multiple things to happen. So this is just one of those scenarios right here. So yeah, so we're still in this candle right here. 15-minute candle is about to close right here. Let's take a look on the 15-minute. See, 15-minute is bullish. Now there's a very good opportunity for this 15-minute candle to continue pushing up right over here. So I guess this is going to be a pretty half decent trade over here if we can get to like 10, 15 pips at this point as we're coming up to a candle close. 15 pips right here, so going to close partials, close 90%, stops to break even, and that's it. What if 11:30 candle had no, can we take impulse entries on 12? Should we wait for 12? That hasn't happened yet. You know, I don't answer questions that start with what if, because if we start talking about what ifs, there are like millions of different what ifs. You know, we can only talk about what's happening and what's presented to the charts. There are so many scenarios. I think a lot of people overthink themselves. They start thinking, oh, what if this happened? What if that happens? What if that, this, that? No, we can't. We can only talk about what's happening right here. The key on this entry were the rejections on the left-hand side. Yes, exactly. Those were the keys to this entry. And as the candle starts to close, now look, the candle has closed in this range. The 1 hour candle has also closed in this range. So there's a good probability for price to continue pushing up. But looks like there's a bit of a rejection right here, which is why we're... See now, this candle here, the 30-minute candle, it broke the high without making a lower wick. So this is not a good example to take a trade because we didn't make a lower wick, right? So if we do come down, see, now it's making a lower wick, right? After making its lower wick, if it breaks the high, its own high, then there's a good probability it's going to continue pushing up, right? So that's why it's important to wait for a candle to make a lower. Sometimes, you know, the price is going to continue moving up without making a lower wick, and that's totally fine. I miss out on those trades as well, you know, because I have to stick to my rule. I traded with 9.5% profit. We're trading the same simulation with you. Oh, nice. Beautiful. We're very nice. So you just got to wait, right? So this candle is about to close. We have NY open. So now, right now, talk to yourself. Whenever you're looking at price, you got to talk to yourself. So by talking to yourself, NY open is going to come around. If price stays above 1889, where do you think NY open volume will push price? To which level do you think will NY open push price? I need resistance, right? If we stay above this area, there's a high probability we're going to push price up to this level with NY open. So these are the things you need to talk to yourself about too, that, oh, okay, NY is open here now, you know, we're closer to that time. Where can price possibly go, right? Or if with NY open, if we can break below 1888, then probably price can go down. But since we're staying above that range, there's a high probability we can continue pushing up. So we're getting that candle close here now. Right here, the 30-minute candle has closed. Take a look on the 15-minute time. The 15-minute candle is, now look, 15-minute candle, solid exhaustion to the downhand side. And like, you know, this 15-minute candle just makes sense after it breaks the previous high to possibly continue pushing up. It just makes sense, right? So in this case, on the 30-minute, we have a doji. On the 1 hour, we have a bullish candle about to form. And in this case, we can take a look on the 15-minute. If it breaks the previous candle's high, yeah, right here, we can possibly take another buy right here, put stops below the previous 15-minute candle and anticipate it to, you know, continue pushing up in this range. That's it. And we will see now the 15-minute candle after broke this high, after making a lower wick, to continue pushing up. hopefully. There's still a very good probability it should continue pushing up. We have the 15-minute candle about to close, and it's so far it's moving very nicely, moving with a lot of confidence. We're up about 10, 11 pips over here. In the last few minutes, closer to NY Open, the 30-minute candle ideally we're about 14, 13 pips in, probably around another 50. Yeah, right here, gonna secure 90%. See, I'm always securing. This is Friday, so we're securing on Fridays, putting stops at break even and just let the rest. Oh wow, we ran up further towards 1894. All right, this is NY Open now, right? NY Open, this is NY Open. Probably it's gonna continue pushing up over here. If it does, awesome. If it doesn't, then that's still great because we still got a trade from Friday. So let's see how this next candle closes. I'm gonna move forward. Oh wow, this runner went really up over here. Very nice. Went beyond that area with NY Open, lots of volume, and continued pushing bullish. So probably gonna close this right here. So we're ending the week with 12%. Do we do a simulation session like this every weekend? No, every other week. I do it every other week. I'll do it 1 week, and then the next week no simulation, and then after that we do another one. No lose any trade. No. In this scenario, we didn't lose any trade because there was a lot of volume. When there was a lot of volume, we waited for confirmations on market structure, and then we basically executed. So total we made what, $846 in this week. $800, right? $840 this week. It's still pretty good. $840 in 1 week of trading. How many trades we took? We took around, let's see here. This is a 1 hour time frame. We took, it was right over here. We took 1, 2, 3, 4, 5 trades. One trade a week. 5 average pips per trade around 15 to 20. I don't know. Let's take a look over here. So maximum drawdown was 0.74. Total profit. I don't know. Largest profit trade was 187. 15. Oh, okay. I guess it was 15. I just can't read those stats. That's maximum spread. But anyway, thank you all for joining in. This is going to be uploaded to the database in about 3 or 4 hours. So I think the lesson from this was to always wait for candles to close in your direction and wait for something you can identify, and then execute that trade. So take care, and yes, we'll see you guys later.